We talk money on a Monday, and good news from the governor of the Reserve Bank last week when it comes to interest rates. The SARB announcing a 25% basis point reduction last week, lowering the repo rate to 7.5%, the prime lending rate to 11%. It's the third rate cut in the last 6 months. Is there a shift happening, particularly when it comes to residential property as we head into 2025? Let's speak to Careen Mckinon, who is the head of sales at Ooba Home Loans. What does this mean? How does this influence home buying trends? The third rate cut in the last 6 months. Careen, good morning.
Good morning, Lester. So, yes, it definitely does bring some good news to the residential property market. This is, as you said, the third rate cut in less than 6 months. And there's certainly an anticipation that potential further rate cuts will be happening in the first half of 2025. You know, the South African economy is quite well placed with our headline inflation at just over 3% in December. So that's definitely a strong case for further interest rate relief locally. Although we also do understand that global economic factors can also dictate that changes in the months ahead, and that is something that we obviously will be keeping an eye on.
I would love a fourth, a fifth, a sixth rate cut over the next 6 months as well. But who knows what happens, particularly in the U.S. market, which the U.S. Fed, the South African Reserve Bank says we are independent. We make our own decisions, but we cannot help note about what happens in the U.S. has an effect on our markets here. But what does this mean for first-time home buyers just over this last 6 months?
So the first-time home loan market, it's been tracking at just about 45% of all our applications for first-time home buyers, and we are anticipating that sector of the market now with the rate cuts will definitely start increasing because affordability is improved. We also did see that the average purchase price paid by a first-time home buyer also rose to 1.2.6 million over the last in December, which was a 6.7% increase year on year. So definitely the activity in that market, house price growth is showing positive, and we do see that sector of the market will have quite a big recovery in 2025 just due to the rate cuts and the affordability factor improving.
It is giving some relief to existing home loan replayers. The banks have saying that they have seen over the last while more distressed debtors. This shift over the last 6 months, is it giving people who may have been struggling to repay their home loans, giving them some relief? Are we seeing any change? I don't know if you can see any change just yet since the announcement was just made last week. But this is going to give those distressed debtors a little bit of relief.
It certainly will be assisting. So, having had the past going from 11.75 to 11 is definitely going to be helping clients that potentially were be in distress and certainly having an impact on their basic disposable income. So that's definitely going to assist from a banking perspective to reduce that book, which definitely did grow over the last 2 years due to the rate hikes. But it isn't a situation, from what we understand with the banks, that's out of control. And certainly they will be helping consumers to get through the last 2 years. And now with the rate cuts, definitely bringing some relief.
Careen Mckinon, really appreciate your time. Head of sales at Ooba Home Loans.